Yesterday was the worst day for stocks here in the U.S. Yesterday was the worst day for stocks here in the U.S. since October of last year. The Dow plunging more than 870 points. The S&P 500, that's what's in most retirement savings accounts, as well as the tech-heavy NASDAQ, both down more than 2% each. And it all comes on the heels of President Trump's threat to impose new tariffs on European allies who oppose the United States' purchase of Greenland. European leaders have said that these tariffs would be unacceptable and in the short term would likely retaliate, potentially causing more unrest in the global markets. Here on Wall Street, what you're seeing play out is what they call the sell America trade. The U.S. dollar is lower, treasuries are selling off. Even Denmark, which opposes the U.S. purchase of Greenland, a pension operator there is selling all its holdings of U.S. treasuries, $100 million worth, due to what the pension managers call poor U.S. government finances. They've cited America's increasing debt. And of course, the United States, we as a country, we fund our daily operations in part through taxes, but also through our borrowing, through those treasuries. So they are very important to how we go forward as a country and how we pay for everyday things. One other thing to note here, Robin, you've also seen a huge spike in gold and silver prices, which are now at an all-time high. They tend to do very well in times of uncertainty.
I am not being dramatic,
right,
or over exaggerating or trolling when I say today was the beginning of the end for the stock market. I am serious. It's over. The world as you know it has come to an end.
Yeah, don't overreact. The world as you know it is coming to an end. But that's not an overreaction. People don't even know how crazy they sound. Hey, did you know that you only take a loss in the stock market once you sell at a loss? Yeah, just keep holding and your money will come right back. And it'll keep growing. That's why the greatest minds of all time always say just hold through it, bro. Just keep investing, hold through it. And then the people who invest when the stocks dip, that's who makes the most money because y'all are so scary. Again, you only lose money when you sell at a loss. So anyone who's investing long-term has nothing to worry about. I hope this helps. The doom and gloom. Oh my God. You know how many times the stock market has tanked since I've been alive? I'm 31. Every single time the stock market drops a little bit, this is the end. This is the end. You know how many ends I've lived through? My God.
Let's talk about everything that happened in the financial markets yesterday because it was a big day. Yesterday was the worst day for U.S. stocks since October. The S&P 500 fell just over 2%, the NASDAQ dropped almost 2.4%, and the Dow was down almost 1.8%. The biggest losses were for technology companies as investors pulled back in response to rising geopolitical tensions. The main trigger was President Trump reigniting trade tensions with Europe tied to his push for the U.S. to gain control of Greenland. When markets see potential trade wars, especially with close allies, they tend to react fast and aggressively. Uncertainty makes investors nervous, and nervous investors sell first and ask questions later. We also saw stress in the bond markets. Interest rates on long-term U.S. Treasury bonds jumped to their highest levels in months. In simple terms, that tells us that investors are demanding more compensation to lend money to the U.S. government, which usually happens when confidence is shaken or when there's heavy global selling of bonds. That rise in rates added even more pressure to stocks because rising interest rates are often bad for companies. At the same time, money rushed into safer places, so gold surged to a brand new record above $4,700 an ounce, showing strong demand for assets that tend to hold value during uncertainty. Bitcoin moved in the opposite direction, falling below $89,000 as investors backed away from riskier assets. Wall Street's fear gauge, the volatility index or VIX, crossed above 20 for the first time in months, signaling elevated anxiety. In terms of corporate highlights, Netflix technically beat earnings expectations, but the stock dropped in after-hours trading because the company announced plans for an all-cash offer for the acquisition of Warner Bros. Discovery's streaming and film assets. United Airlines, on the other hand, reported strong results and a solid outlook for 2026. The company flew a record number of passengers last year and said that demand for premium and business travel remains strong. The industrial conglomerate 3M declined almost 7% yesterday despite beating fourth quarter earnings estimates, as the company gave 2026 guidance slightly below analysts' expectations. SanDisk, the flash memory storage company, surged over 9.5% after Citigroup raised its price target. Many semiconductor leaders, including NVIDIA and Broadcom, fell over 4% amid a larger sell-off in the semiconductor space. Looking ahead to today, it's all about Trump's speech at the World Economic Forum in Davos this morning. Markets will be listening very carefully for any sign that tensions are cooling or heating up further. Trump is also scheduled to speak with some European leaders today to discuss Greenland, so we will see what comes of that. We also get earnings from Johnson & Johnson, Charles Schwab, Halliburton, and more. Bottom line, yesterday wasn't just a bad stock day. It reflected deeper concerns about trade, global stability, and confidence in U.S. assets. Expect volatility to stay elevated, headlines to matter more than usual, and markets to remain sensitive to any geopolitical surprises. Follow for more daily updates that actually make sense, and check out my newsletter if you would like a deeper dive.
To see the stock market crash yesterday, then crash some more this morning, then Trump calling off the European tariffs, then Trump trying to take Greenland, then Trump trying to do... It's insane. It's some of the craziest times in the stock market to be in, and I couldn't be more thankful because there's no other way to make easier money than in stocks.
We might have just got confirmation that the entire market is about to collapse. Today, Jim Cramer, notoriously known as Inverse Cramer, has told investors to buy today. And since then, Bitcoin is now crashing, 190 million liquidated in just 1 hour. But also today, the market is dumping because President Trump announced 10% tariffs on the EU to pressure Denmark into selling Greenland. And since then, almost $215 billion was wiped out from the markets. It is looking rough out here today, guys. XRP is down to $1.91. Solana, $127. HBAR down to 10 cents.
This was the worst trading day for all three averages since October. What happened?
Well, I think investors are really taken aback once again by the uncertainty unleashed over the weekend. This is really slightly different than what we saw during Liberation Day, because there is a sense that the global world order that relies on rules is being broken. And we heard Mark Carney, who is the Prime Minister of Canada, come out at Davos saying, hey, we middle powers have to come together. I thought the quote that he said was pretty interesting. Middle powers must act together because if we are not at the table, we are on the menu. And I think investors are really freaked out by this, that there could be some fracturing in the world order. This causes them to sell stocks. They sold bonds, which pushes interest rates up. They sold the U.S. dollar, and they fled to safety in gold, which reached a new record high yesterday.
And if the president follows through with the 10%, the threat of the 10% tariffs, and normally he follows through on his threats, what do you think would be the impact on the economy and for the consumer?
Well, I think for the economy, it's Europe that will suffer more. I think in the U.S., from the consumer perspective, we might take a little bit of a hit to growth, but it's about inflation. We might continue to see inflation remain at this 3%, maybe 3.2% level. That's much higher than the Fed wants. I think the other part for consumers that's very important here, you heard me mention that bonds sold off and Treasury yields went up. What does that mean? That means mortgage rates could start to rise, exactly what the president has been arguing against. And this is about supply and demand in the marketplace, not any sort of mantra that is being directed at the Fed.
Oh, not mortgage rates. I mean, we're just hoping for them to come down till, I mean, I got to move. But what should people do in terms of guidance? Should they look to last year and how the markets reacted?
I think last year is instructive about not being reactive. Last year, we came in with the stock market very strong. We fell tremendously in April, down a lot. We were at a low of 19% off recent highs. From the April lows to the end of the year, the S&P 500 was up more than 37%, finishing the year at over a 16.6% return. Do not react. Tune out the noise. Stay the course.
I'm sorry, always say this,
but it worked last year.
But it's hard not to freak out when you hear this kind of.
Okay, so freak out, but don't do anything.